Good morning and welcome this morning to Trader Talks in today's market. There is the bell, and that means, well, things might be changing here a little bit as we get started. Hey, welcome today to this version of Trader Talks in today's market. Of course, my name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I am joined by my friend, Michael Bruskof, regional investment strategist and market guru, 20-plus year veteran of the financial markets. By the way, speaking of that, we've got Barb Armstrong out there in the chat helping to answer your questions. And a lot of you, especially the usual suspects, are all here raring to go. So welcome to all of you, whether you're watching this in the live version or watching in the recorded version as well. Before we get to the market and see what's going on, we've got to take care of a couple of quick housekeeping items as we get started here this morning. Remember, everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any kind. It is not advice of any kind. Anything that we look at is for simply demonstration purposes. Now, if we do talk about options, remember the options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option transaction. Remember, the spread trading must be done on a margin account. Multiple leg option strategies will involve multiple transaction costs. And short options, if they are American style, can be assigned at any time up to expiration, regardless of being in the money, at the money, or out of the money. It doesn't matter. We're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It's a great sandbox to play in. It's a great learning environment, but it is not a guarantee of future success out there in the real world. Technical analysis is not the only way to look at the market. It is simply one way. So is fundamental analysis, probability analysis. All are theoretical. None are guarantees as to what the market might do. Remember that investing involves risk, including the loss of principal. I'm going to give you a little bit of a quick agenda, and then I'm going to turn the time over to my good friend Michael for a quick introduction here. We're going to talk about the trend of the major market indices this morning, which, as it seems, at least at the outset, to be a little bit of a downward trend, but we're going to talk about the importance of longer-term trends as well. We're going to take a look at some of the sectors and some of the influences in the market today. So welcome, if you wouldn't mind, my good friend Michael Bruskof, regional investment strategist. Michael, welcome this morning.
Hey, good morning, Ben. How are you doing today?
I am phenomenal. We'll see what happens after the first few minutes of this market, but at the moment, I'm doing great.
We'll take what we can get. We'll take what we can get on a cloudy day in the market.
For sure. I'm going to bring up the indexes really quickly while you introduce yourself and tell them a little bit about what the RIS position is all about, because there are many of you, and you guys are phenomenal.
Yeah, Ben, we're located, there's about 15 of us across the country. We're located in, obviously, nationwide, and primarily in the major metro markets. And what we do with our clients is we meet with them, and we kind of do almost a miniature version of this show. Kind of what is the client's strategy? What are they talking about? What's their portfolio look like? And how are they if they're going to be self-directed, how are they attacking the market? Do they have a risk strategy in place? Are they looking to add options to a strategy that they're, to looking to increase income or protection on a day like today? So we help our clients out with whatever strategies they're trying to run in their portfolio, just really trying to make sure they're doing things that I would say you and I would think would make sense for their portfolio.
Absolutely. And very similar to what we do with our webcast structure here at Schwab Coaching, with the broad variety of webcasts that we have, talking about a lot of different strategies, a lot of different ideas, a lot of different ways that you can approach the market, and a lot of different account sizes. I know Barb Armstrong teaches a great webcast on an ongoing basis called Trading a Smaller Account. So for those of you that maybe are a little bit more conservative or trading smaller accounts, it doesn't matter. You can trade a large account, but trade it in a more conservative approach as well. And that's a great class. I'll let Barb put the link out there in the chat. But Michael, let's take a look at what's going on here in the market this morning. We talked a little bit just as we were getting up and ready to go for this, that we were likely to see this 50-period simple moving average on the SPX getting challenged. And that's in fact right exactly where this market opened this morning, and you can hardly see it because it's buried right in that blue line of the 50-period simple moving average. We see the gap down today in the S&P 500, and it's a gap down and a little bit of a rally. So perhaps kind of persisting the idea that moving averages can act potentially as levels of support. But really quickly, let's pop to the other two indexes that we primarily look at. A little bit of a break below the 50 on the NASDAQ, almost down to a horizontal support. And then the one that was really kind of interesting to me is that we're not seeing quite as much of an impact. It was already below the 50 on the Russell 2000, the small cap index. It is down on a horizontal support level, RSI down, but the Russell seems to be, maybe getting caught up a little bit, but not really the major focus. That certainly seems to be the SPX and the NASDAQ at this point of this little bit of a downward short-term trend today. Michael, you want to speak to maybe some of the things that are going on that are bringing these indexes down this morning?
Well, I think Ben, it's just really one main topic today. I think we could hit on 100 topics, but I think, the release of DeepSeek's new chips. So, a Chinese company, DeepSeek, releases a new artificial intelligence chip over the weekend. They can produce that chip at a little bit cheaper cost, and it can have as quote unquote, I'm saying quote unquote, Ben, as much efficiency as some of these higher cost chips that we're making here in the U.S. That's rattling, I'll say, the international markets, and certainly rattling in the first 6 minutes of our markets today, rattling the U.S. markets a little bit. So I do think,
for sure,
and as you were pointing out, the NDX probably a little more under pressure. Obviously, those large caps fill into the SPX, but that's why probably you're not seeing as much of a reaction or a more muted reaction that you're seeing in the Russell 2000. So I think our focus probably this morning could be on the NDX. I apologize for talking over you.
No, you're fine. And I think, this is one of those areas where, you kind of have to put this into context, right? So we've had, a week or 2 weeks worth of some pretty substantial news in the semiconductor space. We've seen pushes to the upside in some of the, not only AI chip stocks, but also in some of the AI power space stocks and some of the bigger AI players. Microsoft is announcing earnings this week. That's going to be a kind of a key focus here. We've seen Apple, which is coming with earnings this week as well, kind of going back and forth on the AI side and their Apple Intelligence function in some of their new products and things like that. So this has been in the news. It's been one of those things. But then this comes kind of out of left field almost, if you will, from the standpoint of, wow, now here's a competitor to some of these more established AI functions, number one. Number two, probably more importantly, and I think you made mention this is something maybe people aren't realizing, is that it's all based on the chip, which is the challenge to Nvidia, which has been kind of the heart and soul, if you will, of the AI space, from a silicon basis, right? From a hardware basis. And not to mention the fact that apparently over the weekend, DeepSeek, the app, has become the number one downloaded app on the Apple App Store. So, there are a lot of people kind of pivoting to this. Now, it makes you wonder, right? Because I don't know about you, but I've purchased, things on the internet in a variety of different places. And sometimes, depending on where you buy those things from, you take your chances as to what you get, right? In terms of the quality. It's kind of there's a joke out there, right? It's the Temu version of AI, right? And maybe it's not as good. Who knows? That becomes kind of the challenge, right, Michael?
I think that's exactly what we're finding out today, right? Will it be as good? It's the initial reaction today, the knee-jerk reaction. I was reading some articles this morning. Some people, not saying, giving recommendations on the show, some analysts out there would say, hey, weakness in Nvidia today may be an opportunity. I'm not giving that out as investment advice, but I would say specifically, maybe some of these stocks need a little bit of a pullback. Whether this was the cause or the effect, right, might be slightly overdue for a Nvidia to have a 10-15% pullback.
Sure.
Nobody really thought it was going to be in one day, right? Nobody thought it was going to be in one day. But, those are some of the risks that have come with those stocks that have had a tremendous run up. If you're going to have the run up on the way up, sometimes you get a little pothole on the way down. And I think, I don't know that this is the end of Nvidia. I just think that this just might be like exactly what I said, a little pothole in the road today.
Yeah, let's switch over there really quickly. There's a couple of other things I want to come back to, but I think it's probably worth visiting over here the Nvidia space, and we'll just pop it up in our single grid here. And I'm reminded as this comes up, and there's a lot of people hitting this right at the moment. So let's see if this will pop up, and we're waiting for the data here. There it goes. And we can see the push to the downside, again, the break down below kind of a horizontal support level. And I liked what you said, Michael, about, hey, maybe people didn't expect this to be a one-day pullback of that magnitude. If we look from where it was to where it is, we're looking at about a 17% pullback to the 16% pullback to the lows there off of that. But I'm reminded of the quote in the movie Field of Dreams, where Shoeless Joe says to Archibald Graham, look for high and outside, but watch out for in your ear. And sometimes the ball gets thrown in your ear, and here it comes. And we see that move to the downside here on Nvidia. Now the question becomes, with this little bit of a bounce up off of maybe a horizontal that we could draw back into this range, does this become a significant trend break, or is this the possibility of an opportunity for some investors to reload on this stock?
Ben, one of the things, and I a big guy on loving support and resistance, and I see your support line there. Sheer coincidence, Nvidia, as I'm looking at my chart, slightly now above the 200-day moving average. So I'll say as simple as that can be, right? Sitting almost right above the 200. I got my 200 at about 121. Give it almost, call it 122. So we're right around that area of potential longer term support. And as I go back over the last 6 months, Nvidia hasn't even been sniffing this 200-day moving average over almost the last year. We've had a couple of spots where we've come pretty close. And you can see that spot in August. That was about the closest we've come until today over the last year. So I don't want to say it's a significant day. It's a significant day, certainly for Nvidia shareholders. But obviously, since Nvidia is driving so many of these indexes, the S&P 500, the NASDAQ, the Qs, it's going to have a major effect on the market today.
For sure. Now, Helen makes a great comment here. She said maybe that's a good reason to have a balanced portfolio, right? One that's not maybe overweighted in one particular area. That's kind of the creep that happens, I think, sometimes in portfolios, is that we load up on those winners and we rotate out of the ones that maybe aren't performing as well, or maybe we don't have quite as much diversification. But, an impact like this kind of across a bunch of spaces, as Carol mentions, it's not just Nvidia, but AMD, Palantir, Broadcom, Applied Materials, Vistra, and others, in that power space as well, that are seeing these impacts. And it is pretty broad. But I think even on a broader level, Michael, one of the things that I wanted to bring up this morning before we get too deep into some of these individual names was this comparison between the 10-year yield and the SPX. Now, what's going on here, perhaps, is an indication maybe of where some of those institutions are moving to in the very near term out of some of those what have been leadership stocks and maybe back into bonds. The fact that the 10-year yield, and we're using /10Y here, not the contract, just the market. We're using this as a market measure, not trading the futures contract here, just to point that out. Now, if you are going to trade futures, remember that they are highly leveraged. They're not suitable for all investors. Make sure that you're aware that they require separate trading authorization. But taking a look at this here with the 10-year moving a little bit lower, that would suggest that there's some movement into bonds, because when buyers buy bonds and push those prices up, yields go down. And we're seeing that correlation fall off. SPX down, bonds down, or bond yield down, which would simply suggest that maybe there is a little bit of rotation into some fixed income here, right?
I would certainly say so. And I think, obviously interest rates have been one of, I'll say the primary big topic today. We've got one topic that's going on, but over the last few months, the interest rates have been a huge topic. Yeah. We've got a Fed meeting on Wednesday coming up. the odds are predicting from the CBOE, right? We're looking at pretty much a muted move from the Fed this week, meaning no move whatsoever. Nobody's predicting a hike. Nobody's predicting a cut. So I think, maybe the 10-year could, it's hard for me to even say, offer some stability in the market, which we're certainly not there yet. We haven't gotten any stability from that. But maybe, as you're using it as, maybe let's look at that as a safe haven, right? And looking at that rotational move in the market.
Yeah, and I think that's kind of one of the perspectives that, maybe on a larger scale institutional basis, there are other safe havens out there, right? Or at least perceived safe havens. We've heard about things like Bitcoin being kind of that presumed safe haven. Question about whether that is or not, but certainly if we pop back over here to our single grid, we can take a look and see really quickly what's going on in the gold space. Again, we're going to use /GC, and gold really actually even coming off just a little bit today. So not necessarily seeing much of a push into gold as a safe haven necessarily, but maybe more so. I mean, it has been climbing a little bit, but it certainly seems as if some of those fixed income markets have been the space where there is the rotation, and we'll see that play itself out. I mean, it's not necessarily happening in energy because we see energy coming off as well. We've seen a lot of kind of geopolitical and other forces at work here in the energy space. Crude back down into the 74 support level. So we've got a lot of things sitting back down on support. We've got the major market indices. We've got individual stocks sitting on support. We've got energy space sitting on support. And we've got a bunch, well, certainly the Fed meeting this week, but we've also got some GDP numbers. We've got consumer confidence numbers coming up this week. We've got at the end of the week, the Fed jobs data, right? So, I mean, it's not like we don't have anything else to talk about this week besides the fact that, there's this new competitor to some of the chip manufacturers. So this is going to be an interesting week for sure. But I wanted to take a look because a couple of people have been bringing this up, some of those other ancillary stocks in the space. Namely stocks like VST, Vistra, which is in the energy space, and you see a big move to the downside here. CCJ, which is in the energy and infrastructure space, and you see that getting hit as well. So, sometimes, as Pat Mullally used to say, when they raid the house, they get everybody, including the piano player, and that certainly seems to be what's going on here, Michael.
Yeah, and even if you look at that Cameco right there that you have up, not the best head and shoulders forming right there, right? So it'd be kind of that neckline right there, that's my fear of, and I'm not, saying that there's fear out there, but when you start to sell some of these stocks off and they start to make those new, shorter term area lows, as we look at that, now they start to form some patterns where maybe not so optimistically bullish, right? So
sure,
that's some of the things to take a look at I'll say on all these stocks as we go forward.
Now, that being said, I mean, this is one of those things, Michael, that we look at where kind of investor mindset has been. And, there is, as I'm around the country teaching people in our live workshops, I have a conversation with them about the idea of, hey, what do we look at as far as long-term trends? I mean, if you like it when it's at a high, will you still like it when it's at a new higher high? And there's still kind of that mindset of saying, well, wow, this is just too high, it's too expensive, it's too overvalued, whatever the measurement is or whatever the metric is. Now, that would then presume that when stocks get a hit like this, if it does in fact prove to be short-lived, which oftentimes news stories like this are, that maybe this becomes an entry point for some investors who were saying this has been overvalued or this is too high, it can't go any higher. So now is this, do we make the assessment that this is a healthy correction, or is this something that is materially different than just a pullback to an entry point for some investors?
Yeah, and I think, as we'll put a bow on that topic, what I would say is when it's all in one day, it makes it a little bit harder to. I love your story. Hey, can some buyers come in at these lower level support levels? I haven't had a chance, but today's only day one of that pullback, right? So it makes it a little harder for me to jump in on, even in the office that I'm sitting in, people were asking me some questions this morning, and I'm just a little hesitant just because the NASDAQ and some of these stocks have been so strong. Any bout of pullback, it might just be day one, and maybe it is that pullback to support. I'd err on the side of caution a little bit today. That's what I would keep my position.
Sure. Yeah, no, absolutely. And, and you mentioned fear, and I think it's probably worthwhile popping over here and taking a look at what's going on with the VIX. I mean, we see the VIX index, which is purportedly kind of that fear gauge in the market. This is the implied volatility of the cross section of SPX index options, and when they're expensive, what that generally means is that institutions have been buying protection or are buying protection, and oftentimes they're late to the game. We were seeing last week going into Friday. In fact, I even talked about it in the Market Movers webcast on Friday afternoon, the fact that volatility was back down below its average. It was down in an area where it's pretty low, but it's not as low as it has been. So it's staying a little bit elevated, but it wasn't really expensive. And from that standpoint, we weren't necessarily seeing institutions even really starting to nibble on protection. But oftentimes, once the horse is out of the barn, they close the barn door, and they close it pretty hard. And that's what happened this morning, is that they closed that barn door pretty hard and came for some of that protection, pushed the VIX up into the 22 handle. It's now bled back off. It's now sitting right around the 19, which is oftentimes the case. This might be an indication, Michael, don't you think, that of maybe the severity of this? We saw the yen unwind here. We've seen some bigger moves to the upside in the VIX. This isn't there yet. I mean, we touched up into that 22 handle, but we saw that going into the election too, right?
Yeah, listen, I would, let's be realistic, it's still up 28% today. So the VIX is still up 28%. So there is still a lot of fear out there, right? Sure. Did it pull back from, maybe, 10 minutes ago when we started the show, 15 minutes ago when we started the show? Yes, it has pulled back. And it did hit an interesting resistance level that, as you look across the VIX at 22.5, 23, that becomes a, interesting level over the last couple of months. So, yeah, let's see how the day plays out. It's still obviously very early in the morning. But, yeah, things that rattle the nerves of traders and investors in the market first thing on a Monday morning could make for a little bit of a longer week. Or, as you're saying, if it's an area that we can get down to some support maybe on the S&P 500, maybe it's an area where we build a base, the next up leg of the market where we can start to build that base from. But I would, again, to clients, keep those positions tight this week, right? I understand people want to try and step in on these days, but I would step in with caution.
Yeah, and I think that's always kind of a good way to kind of approach, especially more volatile days like this. And I would even argue that that's probably a good way to approach even less volatile days. It sometimes gets to that point where you see VIX kind of sitting around an area for a while and not really moving very much. And it's almost like the horror movie when the character sticks his head around the corner and says, "It's quiet out here, maybe too quiet." Because when VIX gets quiet, that is oftentimes when something comes out of, like we said, left field and makes that move. Now, that being said, a couple of people are commenting, Trader and others are commenting and saying, hey, this is good for premium, right? When we see the VIX expanding a little bit and we see markets at support levels, that might lead to some more two-sided trading where there's enough premium being out there to be sold. And we'll go down this road a little bit, but this might be one of those scenarios where some investors look to maybe harvest some of that premium, either by selling calls or selling cash secured puts against cash in a position, looking to take advantage of some of that upside movement.
Ben, you're right on right there, right? Many people, if you were interested in buying, selling some puts at elevated levels on the VIX certainly will add into that for clients today. And if you're, I'll say, a little more on the fearful side and you're not willing to take profits in these stocks, all right, maybe you had a little bit of a pullback, but you can still get some protection premium on the way down by selling some higher level covered calls
Sure.
on the way, up there.
So let's do this, Michael. Let's pivot over here. Let's bring up our single grid, and we'll just kind of take a look at what's going on here. And I'm going to bring up some of the names that have earnings this week, because I think this is going to be, and has been, where kind of the focus is. We've got some of the big name stocks here in this week that are reporting. And we'll start with this one, which kind of is not necessarily the epicenter. I mean, this is kind of a little bit ancillary to the AI space, but it is still one that's largely watched, and that's APL. And while that's coming up here, I just want to quickly remind people of two things. One, click on that subscribe button down at the bottom of the page if you have not done so already, so that you can stay connected to the Trader Talks webcasts ecosystem, number one. And number two, there is a feedback survey out there in the chat right now. So if you wouldn't mind helping us out and taking just a moment and filling out that feedback survey, let us know how we can make these sessions better for you. And speaking of better, this is one that's kind of interesting, given the fact that we've seen Apple coming off of that very strong run into the end of the year. We've seen this pullback and now finding a bit of a support around the 220 level ahead of the earnings announcement, which is just barely over the horizon on the 30th. A bit of an upward day today here on Apple, Mike.
Nice to see. And I think, just to goes to show you, support levels do work, right? So you got that 220 level support there. Apple's obviously had a great run up, from the pre-election. And then it had a great run up till the end of the year. And then, it's been a little bit of a rough start for Apple at the beginning of the year. I do think we're looking forward to earnings on Thursday. I apologize. Yep. Thursday afternoon after the close. And now I think maybe with that pullback, expectations for iPhone 16, as we're talking AI, I think they have pulled back over the last couple of weeks, but maybe now to a more reasonable level, right?
Yeah, and I think maybe we could argue that the damage has already been done from that trend standpoint, and that may be one of the reasons why we're seeing this little bit of a lift off of the support level. I wanted to pop in here and add implied volatility onto this chart, and I can do that right here just by clicking on the flask icon up at the top. For those of you that are brand new to the Thinkorswim environment, click on that flask icon up here at the top, and then come over to the studies, and I just started typing in the word implied, and I get implied volatility. Double click on it, click on apply, and okay, and now I've got that view of implied volatility down here on the bottom of the chart, and we can see that it is still ramping up despite the fact that we saw that move to the downside. We've got that earnings announcement. That's typically what elevates implied volatility. So think about this implied volatility chart, or this indicator here, is like the VIX for the individual stock, if you will, right? This is the volatility index, perhaps, if you want to look at it that way, for this individual stock. Often ramps up ahead of the earnings announcement. So implied volatility here in this particular case back up near the highs that it has been over the course of the last year. And, that might be one of those times where maybe more advantageous or prudent, perhaps, for some investors, if they feel inclined to sell premium by selling some of those covered calls with the intent that, they might even be okay being called away, having the shares called away from them. Sure. Let's take a look at the next one here that's on the list, which is MSFT, Mr. Softy, Microsoft. And we see that push down from that resistance level in this particular case, coming off of that 447 mark, with another kind of gap down rally day. And if you think about it, if we look at where this kind of gap down to is this 423.70 level, one of the things I like to say is look left to confirm right. And so I'm looking back over here on the left side of the chart and drawing this line kind of across this range and finding perhaps a little bit of a support kind of in this area. It kind of seems to be that area where this price has been oscillating around, kind of right around this 421.40, 422 level. We're not catching absolute tops. We're not catching absolute bottoms here, but it seems to be kind of right in the middle. And we see that pop to the downside and that little bit of a bounce again with their earnings just over the horizon here on the 29th. That's going to be Wednesday with their earnings and implied volatility elevated here. Microsoft kind of the one of the players like Apple in the AI space, not necessarily in the chip space, but in the technology space and the utilization space. So seeing some potential bounce off of that mark there. But Michael, any thoughts here on Microsoft? Otherwise, I'm going to pivot to Google and a couple of the other big earnings that are coming up.
We can move on. Here's what I would say. Microsoft sitting on the 200-day moving average.
Yep.
Acting as a little bit of support. Let's move on. Let's see what else you got there, Ben.
This is Google, and we've got Google announcement coming on the 30th, and this is kind of an interesting one, right? So, actually, I'm sorry, it pushed out to the 4th. This is a little bit further over the horizon here, and I don't know. This is kind of what I'm seeing here in this particular space. Is maybe this little bit of a rising wedge. I mean, it's subtle, but it's powerful, and that potential is for, when we get a rising wedge for maybe continued move to the downside. Nevertheless, we're seeing this kind of still holding that upward trend here, maybe more than most at this point, Michael.
And I would say I actually agree with you. I think, Microsoft has been behaving even, with the trend that you've got up there on that chart. Yeah, a sideways move for Microsoft, for Google for the last couple of weeks. I think that's been a nice move. Little less volatile than, even we're approaching your implied volatility. We're spiking up as we get towards earnings, which you said it moved out till next week. But in general, I think this has been holding up pretty well, a little less volatile comparatively speaking versus the other Magnificent Seven stocks out there.
For sure. Now, this might not be on everybody's Magnificent Seven list, but this is certainly on some people's, and that's McDonald's. And this has kind of been one of those areas that has been maybe somewhat ignored for some time here, is in that fast food space. Although, given the fact that we've seen a lot of focus on inflation and food costs, McDonald's has been, front and center with that, with changes to their menu. And we've seen them kind of come off of this previous high in the the October-November timeframe, rolling back down and maybe finding, again, a little bit of a support area here right around this 281 and a bit of a bounce ahead of the earnings announcement. So McDonald's, seeing that upward movement, but they've got some levels perhaps to work their way through to get back to some of these previous highs here, Michael.
Yeah, we've been in a little bit of a downtrend since that November high, right? We've been pulling down towards there. I like that we're sitting right now. It's a flat 200-day moving average right there. So we do have some support with those lows at around 280 that they hit about early last week, late a week and a half ago. So I like that area on McDonald's. Let's see how that sector does this week. Obviously they have a lot of international sales out there. How the dollar's been affecting that. They'll come up with some of those unique parts in their earnings later on this week. Love to see us get back above that 50-day moving average, which I believe is about your blue line on your screen right there.
Yep, it is. All right, that is sitting right now, right about the 291.65 mark, but it has been pulling back a little bit. But you're right, almost absolutely flat. 200 at the 280 mark, and we see the 10-day in this particular case, kind of that fast short-term moving average, making a quick little flip to the upside here, moving higher. Let's stay on the breakfast theme for just a second here and pivot over to SBUX, the Starbucks, because, these are the things that consumers are focused on, right? We've got earnings coming up tomorrow before market open. Starbucks has been on a bit of a rally. We're about to see the 10 cross the 50, the 200s turning back up. The 50 is kind of flat here at this point, but seeing a little bit of a lift. And this is despite the fact that we saw, again, some rumblings over the weekend in terms of tariffs and trade issues. But despite the fact that coffee futures might be moving a little bit higher here, Starbucks still seems to be moving to the upside, yeah?
Still moving to the upside. I'd be a little cautious of the 102 resistance level above there. That had been, we had been kind of stagnant for the last couple of months, August through December, and that high in December that we hit still might be a little bit of a resistance level for Starbucks. Generally a big mover on earnings, so let's see if it can push through that. I'd be a little more optimistic if it pushed through 102 on that side. That's what I would look at.
Fair enough. All right. Now I'm going to stay on the theme, but slightly different, right? I mean, Starbucks is one of those purveyors of legal stimulants. Let's take a look at another purveyor of medicinal uses, and that's Pfizer, PFE, coming with earnings here towards the end of the week. Actually, beginning of next week is where they're coming. But some attention has been focused on not only the biotech, but also the pharma space, certainly with what's been happening, of course, in the first week of the new administration and some of the changes there, but starting to see Pfizer maybe bouncing up off of this 50, which is, fairly well below the 200 period here, maybe as a proxy for what's been going on with the pharmaceutical space kind of sitting in this downward range. But is this enough of a support bounce maybe to get us back up above that 200 here soon? What do you think?
Yeah, I know. I saw we had a couple of questions about healthcare / pharma,
yep.
Biotech. Listen, again, when you have that flattening 200-day.
Fair enough. All right, so let's take a look here, Michael, while we're still kind of in this individual stock phase. Let's take a look at ExxonMobil in the energy space. Earnings coming up on the 31st. And we looked at the crude oil future market earlier. We saw that crude oil back down in that 74 space. Exxon, the largest of the integrated oil companies, seeing a little bit of a bounce here today, because it's not just about crude, it's about kind of the overall energy space as well, and the potential here, as has been put out in a couple of news reports, of some share buybacks here on the part of Exxon potentially here.
That would, I would think the share buybacks would be some good news for Exxon.
Fair enough. Let's take a look at some corroborating or maybe not corroborating evidence here, and that is Chevron in the integrated space. CVX also with earnings coming, in this case on Friday on the 31st, and we see a little bit of that maybe bull flag type of pattern perspective here if we want to draw that in. I'll grab my magic marker here, and we might look at this as being the flagpole, and then this is the pullback, and then the possibility of a bounce here. I wanted to give a shout out to Barb Armstrong because she teaches the trading price patterns webcast on an ongoing basis. And so this is one of those patterns that we talk about in the workshops. She talks about in that webcast. I know you talk about as well, having some technical analysis leanings as well here, Michael. What do you think of Chevron in this space? A little bit more to the upside than what we've been seeing in Exxon and some of the others.
Yeah, and I think it's a big difference. I mean, even if you did an overlay of the two, what I would say is Exxon, was below the 200. It was below the 50. Right now, as I'm looking at your Chevron, we're above the 200 and above the 50, right? So I think from a technical perspective, if you put, just the two of them together, Chevron might be performing a little bit better from a chart perspective. Obviously, we can get into the fundamentals of the earnings of both of them if we wanted to. But comparatively speaking, I think Chevron, they're both coming out on Friday morning. And you can see the relative performance to the two of them. Chevron's outperforming, by a decent margin. But it doesn't mean that I'm bearish. I think that sector itself, with oil, what do we say, stuck around 72, 74, right around in that area right now. Yep. I think that, a little pressure on oil prices is not helping either one of those guys right now. Over the last couple of weeks, President Trump last week asking for, a little pullback or an increase in supply. I don't know if we can make that happen or not. We'll find out with Saudi Arabia. But yeah, those are, I think there's some room in that sector. And if I was looking at it, comparatively speaking, Chevron looks a little bit better than Exxon at this point in time.
Yeah. All right. I'm going to pivot back over here to crude just so that we can talk a little bit about that and we can see what that is doing here. Again, right back on that 74 level of support. Now, kind of the thing that's maybe driving a lot of this as well, and maybe something to pay attention to, especially as we go into the Fed meeting on Wednesday, is the dollar. Taking a look at the dollar index futures here. Dollar seeing a little bit of downside movement yet again today, and perhaps, I mean, this is kind of the pattern, Michael, that we've been seeing in a lot of cases. It's kind of been this castle-like head and shoulders pattern, right? Kind of these fairly narrow, short-lived, I mean, a course of maybe a month or month and a half, head and shoulders type patterns. The dollar seems to have broken the neckline on that pattern, which would suggest maybe a symmetrical move back down into this 105 level. If we see further dollar weakening, just in overall terms, what do you suppose that's going to do for this market? Is a weaker dollar better for equities or worse for equities typically?
Typically speaking, like, I was looking at something earlier this morning about the dollar. China increased their interest rates last week. That put a little bit pressure on the dollar, which is what, as you see some of those big moves that we had last week. Typically speaking, a weaker dollar is not necessarily going to be so strong for the market. We would prefer the dollar and the market to be kind of going up at the same time. That's, based on historical perspectives, and you can even see that from September to, just this year, as the market was going up, the dollar was going up at the same time. So, strong move there. You've seen, this has been, I don't want to say a stagnant year, but it depends where we finish today. We might be unchanged for the year as of today, and then that would say, hey, unchanged for the year as of today. Dollar's been trending down since the beginning of the year. So they do have a high I don't want to say a high correlation, but they are correlated to each other. I would say it's a pretty strong correlation. Love to hear your thoughts.
I would agree with that 100%. As a matter of fact, I'm just going to pop that on here really quickly. We'll just add in our comparison with the SPX really fast, and you can see that correlation. So the dollar starts to roll off, and maybe the dollar leading the dance, and the SPX following along, and so we might see that relationship here. Correlation probably not 100%, but fairly close there. Let's pop back over here though really quickly to our index grid and just kind of see where things are sitting. A little bit back up on the SPX from where we talked about it this morning, coming up off of that 50 period. We see the NASDAQ as we rotate over here as well, seeing a little bit more of a green candle, kind of knocking its head on that 50 period, and the Russell 2000 in the small cap space gaining back a little bit, coming back up into that little symmetrical triangle, and maybe making a run for that 50 period moving average. Michael, our time goes so fast. I just wanted to remind a couple of people of a couple of things. One, there's that feedback survey out there. Two, if you want to learn more information, check out our webcasts here and our archives on the Trader Talks webcast channel on YouTube. The place that you can get to our forward schedule is right here at schwab.com/coaching. And just a quick reminder that we are going to be in a variety of your local neighborhoods coming up. We're going to be in Seattle this weekend. We're going to be in Atlanta the weekend following. Then we're going to be in Scottsdale the 7th and 8th. We're going to be in Chicago for our advanced options workshop, and then in Detroit again for our technical analysis and options strategies workshop. So we've got a strong slate of those live events. Michael, I expect that you're going to be at one or two of those along the way, and you're going to be out there working with our branch network. Great place for people to get their connection made, answer their questions, and have those conversations about their portfolios. Michael, final word from you, and then we'll wrap this up.
No, Ben, it was great. I just say our first time presenting together, so I thought this was awesome. I appreciate you having me on your show today, and I'll look forward to another time in the future.
Fair enough. We will have to do that as well. You have a great day, guys. Take a look at the market. Keep your eyes on what's going on, and we will see you again very soon. Thanks to Barb for helping out and our great production staff. Have a great day, everybody. We'll see you soon. Bye-bye.